there's two statistics areas on this, or two information in the statistics area. This lower section right in here are our trade statistics. So let's take a look at them. Now the headings are over here in column L. So over here in these gray boxes. So what we have here are maximum points. And in the case of the basic, the maximum points were 66. I'll jump down to the average points, two lines down. The average was for the basic setup was 9.5 points. So hey, that thing's winning. I'll jump down to the minimum points. The minimum is -40. So when there's a loser, it's negative. So the worst losing trade for basic was 40 points. Okay, I'm going to jump down 2 more lines. I'm skipping over the standard deviation momentarily, and I'm going to show you the total points. So the basic had 2,023 points. Now, someone's going to say, but wait a minute, over what time period was that? And I'm just going to refer you back over here to column A and say, well, that was between row 30 and row 787, which was September 28th to January 15th. Once again, if we change those row numbers to any particular date in there, we can change the date of the analysis, and all these numbers will change. So you can take a look at any week, any month, any particular period. You can look at your back test, your forward test, your real trades. It's completely flexible as to what you want to be looking at and the statistics that you want to be seeing. So, great. Now, we see then that the standard deviation in this line right here was 26 points. Now, once again, let's review very quickly. Standard deviation says take the standard deviation, which was 26 points, add it to the average, and you get the positive standard deviation. Subtract it from the average, you get the negative standard deviation. If you take 2 times the standard deviation, add that to the positive, you get the 2 standard deviation, which is up here. And we can see that if the average was 9.5, the positive 2 standard deviation was 61 points, or almost 62 points. The negative 2 standard deviation is right in this area, and it is -43 points. What does that mean to us again? Well, remember, right over here, under this part of the tab, in the blue area where we had that trade distribution, it says at least 75% of the trades will fall within plus and minus 2 standard deviations. So you have a 75% probability that you're going to be somewhere between -42 and +61. The average is 9.5, so we can see that this thing is biased to the upside. We can see that the maximum is 66. Again, it just shows you that we're biased to the upside. We get more winners than losers. And we get bigger winner trades than we get losing trades. So that's all useful information so you can judge how good the basic setup is. Now let's jump up to the upper portion. Again, the gray boxes in column L on the left tell us what kind of information we have for each trade type. We can see in the first 3 we've got dollars won, dollars lost, and dollars net. We can see in the next section we have the number of winners, number of losers, and the number of neutral or break-even trades. The next box we have the number % of winners, % of losers, the profit factor, and the expectation. Now, the reason these are blue, the % winners, profit factor, and expectation, and down here the average at the bottom, the average dollars per trade, down here on this row, the reason those are blue is because those are 4 of our performance measurements. Remember, over here in the green area of the chart, we can see that the % winners, the profit factor, the expectation, those are our performance factors. Again, % winners, profit factor, expectation, and average dollars per trade. That's why those are blue. The rest of them are orange to tell you that these are informational statistics. Okay? So hopefully that's pretty straightforward. Now, when we look at this, let's take a look from a little further out perspective and say, well, which of these trading setup types did the best? And we can see, looking just at % winners, that the oversold overbought was almost 89% winners. But there were only 9 trades, so that those trades don't come along as often. We can see that the basic setup was 68% winners, which is a great percentage, and we can see that there are, a couple hundred trades in there. And as you can see, you can just move across there and see if one of these types is significantly better than the other. Now, the value of this kind of a setup is, actually, I'll let TJ explain that. TJ, why do we sometimes use things like a basic setup that might be, say, a momentum style or something, a breakout or something, an oversold, overbought, and a re-entry? Why are we looking to have a system that uses all three of those setup types?
Well, I don't know if we're always going to build a system that uses all those setup types. Maybe there'll be others too, but in the case of this particular strategy, I was looking for trades that gave us the initial basic setup, the breakout trade, for example, and then another trade that was a continuation trade, known maybe as a pullback, a way to get back on board a trend. And the oversold, overbought trade was actually, there's only 9 of them on here because I added that setup much later in the data. That trade came later, and I noticed that it was a really good setup. And as you can see, the first 9 won 8 out of 9, but that's a reversal trade, basically, a counter trend trade. The whole idea of keeping track of each one separate is because you learn a lot about your system. I mean, if I learn that one of these trade setups is underperforming, I might go back and restudy that